So we are starting to see some M&A activity in the real estate sector for the first time significantly in a few years. Um, we'll get into that in just a second. Before we do, please take a minute and check out the link you see on your screen for a message from our sponsor, The Motley Fool. You can get the top 10 stocks to buy right now, and it is the best way to support this work that Tyler and I are doing. So one of my favorite REITs, the longest REIT I've owned in my portfolio, is Realty Income. And they recently announced a deal to acquire competitor Spirit Realty Capital, which is roughly 1/6 of its size, in an all-stock transaction. So Spirit shareholders will just get new shares of Realty Income. They're adding about 2,000 properties to the portfolio, and there's a lot of overlap, and the deal definitely makes sense on the surface. So, Tyler, is this a good thing for shareholders? Is this a knock your socks off deal, or is this just kind of, man, they had to grow somehow?
I'm tending a little bit towards the meh. There's not. I'm not super jazzed by it. It's not a bad deal in any way, right? Like you said, it's an all stock deal, so we're not adding any additional debt, which at a time in rising interest rates, adding on debt doesn't exactly sound great. Spirit Realty had a relatively good balance sheet coming into this, even compared to Realty Income, obviously smaller, but if you look like how its debt was termed out, excuse me, its interest rate and some of those considerations, it looked like it was in pretty decent shape. So Realty Income wasn't like going out on a limb to save a distressed company to do this. I think that the price that Realty Income paid is reflected in what the price was paid. And for investors, this is where it kind of just looks meh. Like there's a lot of things that Realty Income says in its investor presentations about this. Like we diversify our tenant base a little bit more. We diversify a little bit more across different property types. And I think all of those things down the road may be beneficial from a strategic standpoint, but just on the pure numbers of for the investor, Realty Income is saying that it's going to be about a 2.5% accretive to funds from operations per share. So right off the bat, 2.5% just for the deal, which, like I said, it's not a great deal, but it's not bad because we're already accretive to a per share value. So that's a good thing. But as a net lease realty company, it's not like they're buying a huge development portfolio. They're not buying into a lot of growth. They're just going to have to keep acquiring other assets in the same way that they've been doing to, add to the balance sheet. And because of Realty Income size, obviously they have to make deals like this one to really move the needle. And I guess the one thing that I would say overall is the biggest benefit I can see from this, and I think this is going to be a theme with real estate investment trust deals from here for the next couple of years, is we're going to get bigger, we're going to get diversified, we're going to have a larger, more diverse rent roll, tenant quality, all of those things, so that when we have to go refinance our debt, we're going to look better. We're going to look stronger. So the credit ratings agencies are going to make sure that we have really, really good credit ratings, and we're going to have to be able to term it out, because the truth of the matter is, no matter how big, no matter how good you are, your cost of capital is going to be going up. And anything that you can do on the margins to improve your cost of capital over the next 3 or 4 years, this is also assuming like we're in a period of higher interest rates. You want to do something like this because it's just going to make you better. And I think the smaller companies are going to be looking to do like deals with a Realty Income, saying, look, we can't grow, or we can't really do much with this higher cost of capital. We're going to have to just basically sell or do something dramatic to change our prospects. So I think in the long-term strategic, that would be the move that I see is the best case reason why Realty Income would do this. But from a pure right now, how much is this going to change the share price or change the per value? It's kind of meh.
Yeah, I would kind of agree with that. So a couple things I would mention. One thing I do like about this is it brings a lot more industrial properties into Realty Income's portfolio. Spirit gets about 26% of its rental income from industrial. Realty Income's at about half that. So it increases the industrial concentration, which, as we've talked about on videos before, industrial is a pretty interesting property space right now. So I like that part of it. But these are very similar portfolios. Just to kind of give you some numbers, 14 out of Realty Income's top 20 tenants are on Spirit's top 20 list as well. So a lot of tenant overlap in the retail and service oriented space, and similar property focus. Both focus on properties that either are non-discretionary, they sell at a low price point, the businesses that occupy them, or are service based. So a lot of similarity, and they are getting Spirit at a discounted valuation to where it was. They're paying a bit of a premium, but both stocks were down about 30% from their highs at the time of this deal was announced, which isn't too surprising for retail, but I like that valuation, especially for the industrial properties. There is, and the average debt they're absorbing is at a interest rate below 3.5%. As Tyler mentioned, that needs to be refinanced at some point. But for the time being, that's a very efficient way to grow in this high cost of capital environment. It would be like if you bought a house and you found someone who had a 3.5% mortgage rate that you could assume. At some point that's going to run out, especially if it's an adjustable rate loan or something like that. But it's good for the time being. To me, the biggest benefit of this deal as a Realty Income shareholder is it's created a buying opportunity in Realty Income, in my opinion. The stock reacted negatively to this news, which isn't surprising, especially in cases where the acquirer is paying a premium. The stock dropped about 7% the day of the announcement. Realty Income is paying its highest yield since I've been a shareholder. You can get Realty Income at about a 6.5% yield on cost as we're recording this. So, like I said, to me, the biggest benefit is I've been incrementally buying Realty Income shares for about 10 years now, and this makes it even more attractive to do so. So I applaud them for trying to grow in a difficult environment to grow. Like you said, it's not a great deal. It's a meh deal, in my opinion. It's just like if they'd bought some properties in a normal environment.
Yeah,
So
and the other thing that is encouraging is this is getting back to the kind of properties that Realty Income knows well and does well. Like what was it, a couple of years ago, or not even a couple of years ago, they made that deal for the Encore Casino in Boston Harbor area. And that was very far afield of what you would normally expect from Realty Income to do. They're like mostly convenience stores, uh, tire shops, a lot of single tenant net lease deals, and then all of a sudden it's like, yeah, we're going to do a multi-billion-dollar casino deal, which brought on a huge tenant at that was very uncharacteristic of what they do. So to kind of get to diversify away a little bit more from the casino deal and get back to what they do best, I think is encouraging too. Because if Realty Income started making a lot of like weird, uncharacteristic deals to grow, then you'd start being like, well, what's going on here?
yeah, I'd like to see them acquire one of the industrial REITs we talk about. I wouldn't mind them doing that, because they're good at industrial. And I'm wondering if they're going to unload Spirit's office properties, because they unloaded theirs a few years ago, and Spirit still has, a significant amount of office properties in its portfolio. So I'm wondering if it's going to unload that. But all in all, I like this deal. I think it creates a buying opportunity for long-term Realty Income shareholders. But this is nothing that is like a game-changing deal for the investment thesis. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.